so I'll read our open meetings statute. So pursuant to Section 84-1411 of the Nebraska statutes, notice of this meeting was given on Thursday, September 3rd, 2020. Further, pursuant to that same section, the next regular meeting of the Board of Trustees will be held Thursday, November 5th, 2020 at 4 p.m. in the Board Conference Room, second floor at the TAC Building, 3215 Cummings Street, Omaha, Nebraska. The agenda will be kept current and available for public inspection in the retirement office at the Teacher Administrative Center during regular working hours. Pursuant to Section 84-1412 of the Nebraska statutes, the public is hereby informed that a current copy of the Nebraska Opening Meetings Act is posted in the Board of Education meeting room on the north wall. Cecilia, please call the roll.
Bourne.
Here.
Havlovic.
Here.
Herstenbach is excused. He called in. Johnson.
Here.
Logan. Plasek. He also called his excused. And Ray.
Here.
5 present.
All right, thank you. Cecilia sent out the September 3rd meeting minutes, the September 3rd, 2020 regular meeting minutes. Any comments on those minutes? Look for a motion to approve those.
Motion to approve the minutes.
Second.
All in favor?
No.
Oh,
Who seconded? I'm sorry.
please call the roll, Cecilia.
Okay. All right. Ray.
Aye.
Logan. Havlovic.
Aye.
Johnson.
Aye.
Bourne.
Aye.
5 ayes.
Thank you. The motion passes. We also, the meeting minutes for the September 8th special meeting were distributed in the same email. Were there any changes or comments relative to the special meeting minutes? Hearing none. Cecilia, would you call the roll, please?
Motion.
Oh, could I have a motion to approve those special meeting minutes?
Move approval of the September 8th minutes.
Second.
All right, we have a motion and a second. Cecilia, would you call the roll?
Logan. Havlovic.
Aye.
Johnson.
Aye.
Ray.
Aye.
Bourne.
Aye.
5 ayes.
Thank you. The next agenda item, the discussion on the financial statements from August 2020, we'll postpone that until next month as those statements are not available. So we'll move down to the agenda item number 5, discussion on the investment report for the second quarter of 2020. Cecilia?
Okay, the second quarter 2020 for the period ending June 30. If we look at page 4, which is in your package, a look at the market highlights show that over the long term, annualized returns are positive over markets and serves to remind us that as a pension plan, we are long-term investors. On page 5, market highlights by the numbers show again that a diversified long-term portfolio has generated positive results except for commodities, but please note that OSERS does not hold any commodities outright. Page 6 looks at the OSERS portfolio, and at the close of June 30th, the portfolio was valued at $1,236 million, and that's up $63.3 million from the first quarter of 2020. Page 7 shows that the OSERS portfolio represents 4.1% of the NIC's overall pool of assets, which means OSERS is responsible for 4.1% of the NIC, the Nebraska Investment Council, cost that is shared throughout the NIC pool of assets. OSERS is responsible for its own fees associated with those investments that are only pertainable to the OSERS Trust Fund. Page 9, from the second quarter 2020, the OSERS portfolio returned a positive 7%. However, year to date, the portfolio lost 4%. But again, we're long-term investors, so over the last 3 years, the portfolio returned 4.3%. And remember, the NIC took over the management of the OSERS portfolio as of January 1, 2017. Page 26 shows us that the OSERS legacy investments is down to approximately 24.5% of the overall OSERS portfolio, which is ahead of the 4-year transition target. Page 30 shows us the internal rate of return on the OSERS private market investments through March 31, 2020. Remember, there's always a 1-quarter lag. Give or take, collectively, our private equity and real estate asset classes as a whole are in the positive territory since inception. Private equity since inception has returned 5.25%, and real estate since its inception of that program has returned 8.25%. Page 36 reviews OSERS management fees, shows an average, just a basic average of 94 basis points over the OSERS portfolio. And that basically concludes our second quarter portfolio performance report.
You had a question? Well, ordinarily, we hear from the investment council head himself at some point during the year. I know that COVID has eliminated some of that. When do we expect that Michael Walden Newman to come in person to talk with us?
Actually, the next line item, agenda item, I would have brought that up. But yes, we are planning for the January meeting.
Thank you.
Okay.
All right, further discussion? Okay, thank you, Cecilia. We'll move on to agenda item number 6, discussion on Aon, the capital markets assumptions.
Okay. I'm going to go over just the highlights, and as I mentioned just a bit earlier, I have asked Aon to participate in our January meeting. It'll probably be via video, but the January meeting is the beginning of our 2021 valuation. And so I want Aon to review the capital market assumptions just before we start thinking about our valuation report and our experience study, because 2021 will be an experience study. So back to the capital market assumptions. Page 5 shows that Aon has forecasted a 10-year annualized return on the defined benefit plan portfolio of 5.7% with a standard deviation of 12.3%. And over the 30 years, they've annualized the return or forecast it to be 6.3% with a standard deviation of 12.4%. I just want to remind everybody that OSERS assumed rate of return is currently at 7.5%. That means if over the years this portfolio only returns the 5.7 or the 6.3, someone is going to have to make up the difference. Okay? Let's remember that C plus I equals B plus E, C being contributions, I being investment income, needs to weigh against the benefits and the expenses of the plan. Page 11 shows us that since 2011, Aon has been lowering the expected nominal return on various asset classes, whereas the hope lies, from what this shows, the hope lies on global equity and emerging markets and private equity. And we all know we cannot put the total portfolio in global equity, emerging markets, and private equity. Page 12 illustrates the annualized risk versus the annualized return, indicating to exceed our current assumed rate of return of 7.5 with a 12% standard deviation, the portfolio would need to be aligned with higher risk, and that is just not going to happen in the future. So I'm just saying this so that we all start thinking and getting prepared for next year. Page 13 illustrates a distribution of U.S. public pension plan investment return assumptions, showing that in 2019, of the 150 plans that were surveyed, the median return was 7.25% a reminder, whereas OSERS is at 7.5. I do know that one of our sister plans, Kansas City Public School Retirement System, just this year in June lowered their assumed rate of return from 7.75 down to 7.5. So, all this to say, come first quarter 2021, we will need to have serious discussions on the assumptions used for the OSERS annual evaluation reports. I just want people to start thinking about it and give everyone a heads up. The actuary will talk to us early part of 2021, and as I said, I've asked Aon to talk to us the early part of 2021. That concludes the discussion on capital markets.
Cecilia, who are the Aon representatives? Are there dedicated folks from Aon that handle that account?
Max Coterie is the assigned client service manager head of the team, and then there are others who are assigned to individual asset classes, but Max is the head.
Excellent, thank you. Any discussion on the capital markets assumption report? Hearing none, we'll move into agenda item number 7, discussion on Legislative Bill 31, introduced in 2019, and Legislative Resolution 318, introduced in 2020.
Okay. So the Nebraska Retirement Committee of the Legislature held a hearing on the outcome of LB 31 on Friday, September 18th, 2020. All the board members of all the trustees of OSERS were sent a copy of the transcript of the hearing. It is, 40-something pages. The first up was a presentation by Randy Gerke, who is the director of the NPERS, and he reviewed the administration analysis. I think one of the key takeaways is that as large as this project would be, he did want to emphasize and correct that new staff will be needed with an increase to the NPERS budget of $899,000 for the first year, an ongoing increase of roughly $835,000. Next up was a presentation by Linnea Solutions. And as you read through the transcript, you will notice that there were indications from the transcribers that his presentation was inaudible. He was coming in over a conference call, and it kept breaking up. So you will see little brackets where it just says inaudible. But he did express concern on the data integrity given the age of the underlying coding of the two systems and the patches that have been applied over the years, but they feel they can work through them. Next up was our very own Dr. Logan on behalf of OPS, who testified in favor of LB 31. And then up was me on behalf of the OSERS board, who testified in opposition to LB 31. Followed by Ms. Walter Sue Dodd, president of OEA Retired, who expressed opposition and questioned the spending of millions on the transition rather than putting the monies into the OSERS plan. I also saw that OEA submitted a letter statement questioning 4 points, questioning continuity of customer service, questioning members' ability to teach post-termination in non-OPS schools, questioning ability to maintain a robust substitute teaching pool, and questioning OPS teacher representation on the PERB board. SEIU Local 226 also submitted a letter questioning why there would be no Omaha office and stating they believe not all questions have been vetted. The Omaha Area Retirement Employees Association also submitted a statement in opposition to the transition of the administration to NPERS. Also questioning customer service and why no Omaha, that there would not be an Omaha office. Something else that was brought up, and I just want to maybe clarify, the district has its own tax ID number, and the OSERS Trust Fund has its own separate tax ID number. The trust fund is a separate entity from the district's general funds. So that was something that came up in conversation at the hearing, and I just want to make sure that those that were there understood that. That is a very highlight of the hearing, and I don't open it up for board discussion. There were some board members there.
All right. Any discussion, thoughts, comments relative to the hearing? Legislative Bill 31 and LR 318 in general?
I do have a question. I'm not sure it can be answered right now, but I do have a question. This is actually a question, I guess, for OPS. Does OPS intend to go forward without further investigation of the office in Omaha, as well as the costs that are involved? Was there going to be a kind of a pullback until we have a chance to vet some of those questions that were raised at the hearing? I don't know if anyone has an answer to that, but that's one of the questions I think we need to have an answer to before.
We plan to move forward.
Are you going to move forward with or without the additional?
We plan to move forward with what we have at this moment.
Okay, thank you.
All right. Further questions, comments, thoughts? All right. Seeing none, thank you, Cecilia, for the update. Move on to agenda item 8, action or discussion on allowable indirect costs for the fiscal year 2020. Cecilia, do you want to?
Okay, so Nebraska Revised Statute, Section 79-9, 115, permits OPS to assess OSERS for expenses associated with the following: all expenses for the retirement system office accommodations and integrated pension benefit information management systems, including all services, support, furniture, and equipment provided to or by the district. The exception to permissible charges are the following: clerical work incurred in connection with maintenance of records and payment of benefits. OSERS does pay its own expenses, cost of postage for monthly mailings. OSERS pays all of its expenses for vendors, the actuary, the auditor. OSERS reimburses the district for staff. So the cost is reflected in our budget as a line item titled Allowable Indirect Cost. For 2017, which was the first year that this was permissible, OSERS was charged $200,000. For 2018, OSERS was charged $55,814,000, and for 2019, OSERS was charged $96,735. So for 2020, fiscal 2020, the initial charge was $119,444. And this is generally something I don't see until after the fiscal year end. Do you want to say anything? Or okay. So we've asked OPS Finance to reevaluate how that charge comes about, and Mr. Roberts is here to talk with the board.
Welcome.
Good afternoon, thanks. So we did take a look at that, and the way the indirect cost allocation takes place is we look at all costs on the OSERS fund P&L. We exclude benefit payments, obviously, because of the size of that, and we apply the indirect rate that we get from the state. After taking a look, and this is my first full year as CFO, so we took a fresh look at things this year. Included in that base allocation were costs for portfolio manager fees, which come from NIC now. It's appropriate to exclude those from the calculations. So by excluding those from the initial calculation that Cecilia mentioned of $119,000, that will reduce the fee to a little over $46,000 for this year, which will be the lowest year of the last 4 since this was allowed. I expect to continue that practice forward because it's almost double counting, I do believe, in my mind, and this is a fair calculation representing the true cost that the district has in supporting the fund and the personnel.
Any questions for Mr. Roberts? Well, thank you for taking a look at it and recalculating it. So
You bet.
Appreciate it.
Take care. Thanks.
So do we normally take a motion on accepting the report, or is there something that needs to be done to pay the fee? or-
No, it's in the statute.
Okay, so, thank you. We'll move on then to the Executive Director's report.
Okay, so one of the favorite subjects at the October meeting is a discussion of the medical COLA. The statute permits for a retiree in pay status to be paid a medical COLA after 10 years of retirement benefits. So they basically begin in the 11th year of retirement. The COLA works out to be $10 a month your first year and increases each year to a maximum of increases to a maximum of $250 per month that is added to a pensioner's monthly benefit. This year, the medical COLA encompassed 2,135 retirees out of the 5,000 that we have on the books right now. The 2020 medical COLA, the additional $10 that was added to everyone, added roughly $32,000 to our monthly payroll. Total medical COLA for October payment was $384,000, so that's everybody's medical COLA together. I do want to remind the board and the public that the medical COLA does not pass to surviving spouses. Upon the death of the retiree on a joint and survivor annuity, the monthly medical COLA is adjusted from the amount that the retiree was receiving, and the joint and survivor, the survivor will receive a benefit based on the option, meaning 100%, 50%, or 75%, but we will have removed the medical COLA. We often get a phone call that I thought I was going to get the same amount. No, that was the medical COLA is pulled off. So that's medical COLA. We are in the middle of our 2020 fiscal year audit. It is moving along, and we expect that the Syme Johnson will be here in December to give a presentation to the board. That concludes the Executive Director's report.
All right, any questions for Cecilia on the Executive Director's report?
I don't have a question. I just have an additional comment on the medical COLA. I think the other thing that's important for us to remember about the medical COLA is that you do have to have 20 years in order to qualify for the full benefit. If you have less than 20 years, your medical COLA is prorated based on how many years you have compared to 20. So that's a feature that is part of the statute. It's not something we control, but not everybody gets that $10. Some people will get proportionally less if they have fewer than 20 years of service credit.
All right, thank you, Roger. Any other questions or comments regarding the report? All right, thank you. Move on to agenda item 10. We'll have the trustees report.
I've registered for the NCTR meeting later this month. We have a committee meeting next Monday by Zoom for the resolutions. So I should have the chance to vote for the resolutions for the two people we have submitted on Monday, and that will be taken up during the business meeting of NCTR, which occurs on the 15th of October. So that information will not actually be out in public until the 15th of October. But we do have, I think, 2 resolutions of appreciation that will be heard in the Resolutions Committee on Monday.
Thank you. Anything else? All right, thank you. We'll move on to agenda item number 11, action on legal matters. Faith?
I move that the Board of Trustees go into closed session for the protection of the public interest and for the protection of needless injury to the reputation of individuals, to discuss with legal counsel and Cecilia Carta litigation matters affecting the trust fund and personal financial matters regarding members of OSERS.
All right, we have a motion. Is there a second?
Second.
We have a motion and a second. Cecilia, would you call the roll, please?
Ray,
Aye.
Logan, Havlovic,
Aye.
Johnson,
Aye.
Bourne.
Aye.
5 ayes.
Okay, we are in closed session.
No, you have to read the second part.
So I'm getting ready to read my statement.
Okay. Sorry.
Okay, let me remind the board that the purpose for the closed session is for the protection of the public interest and for the prevention of needless injury to the reputation of individuals, to discuss with legal counsel and Cecilia Carter litigation matters affecting the trust fund and personal financial matters regarding members of OSERS. All right, so we're going to move into closed session then.
That's a good one. Thank you.
All right, thank you. Okay, so
So, Laura?
okay, so we're back into open session. We'll move on to agenda item 13.
Just call the-
Oh, go ahead, Cecilia, would you call a roll, please?
Okay, Bourne,
Here.
Havlovic,
Here.
Johnson,
Here.
Logan, Ray.
Here.
5 present.
Excellent. So we'll move back into our agenda. Item 13, any new business?
I have a motion. I move the Board of Trustees ratify the October pension payments in the amount of $11,066,438.09 to 5,082 payees. Approve the October staff payroll amount of $31,441.44. Approve 20 new retirements effective October 1st, 2020, with the first pension check to be paid November 3rd. Ratify the termination of 14 retirements due to death of the retiree, the continuation of 2 joint survivorship annuities to the beneficiaries. Approve the October refunds of $1,158,922.17 to 92 former employees and members of OSERS. And approve the October payment of October accounts payable in the amount of $34,411 even.
Okay, you've heard the motion. Do we have a second?
Second.
Okay, we have a motion and a second. Any discussion? Cecilia, would you call the roll?
Logan, Johnson,
Aye.
Havlovic,
Aye.
Ray,
Aye.
Bourne.
Aye.
5 ayes.
Motion passes. Move into agenda item 13. Any new business? No, seeing nothing? Seeing none? That'll adjourn our session for today. Thank you.
We are adjourned at 4:48. Thank you.